Hello everyone, welcome back to another trade recap. Went long S&P trading a market maker buy model here on the 1 minute chart. It's been more difficult to see sustained price runs with the consolidation that we've been seeing in the indices really since December has started. So I had to be patient, waiting for the model to form, waiting for the market to become one-sided and obvious, which obviously is much more difficult to do when the market is chopping in a range. Waited till about 10:30 till I got my setup, got what I was looking for, and then finished out the market maker buy models, smoking the equal highs that they left on the 9:30 drop. If you want my bias and my analysis before 9:30 every single day, join the free Discord, click the link down below so you can know exactly what my bias is and what I'm going to be looking to take trades off of every trading day. Enjoy. All right, guys. So looking at the NASDAQ and the S&P here. Focus on NASDAQ here, about 30 seconds till the open, but no worries. Nothing's changed much. We're still in a consolidation, and what I want you guys to take away is this is classic December price action. Classic December is a lot of consolidation here. Again, a lot of fund level order flow. Big equity, deep pocket traders are not pushing a whole lot in the month of December, and especially with all the uncertainty that we have looming. So that's why we're seeing a lot of the market consolidating right now. We are using that daily balanced price range as support, at least for the moment. So if that continues, these smooth highs here are of interest for me. All right, so on the 15-minute chart, they dropped down. They cleared the overnight lows here that were engineered on the pump higher. So what I'm determining here is direction. Are we going higher or lower? Obviously, that's, as you guys can see, and hopefully you guys have been taken away the last couple of weeks, that in consolidations, direction is a bit more tough, and reasonably so, because it's not going anywhere. Right? So no amount of analysis, no amount of hope on your part is ever going to make a like NASDAQ move, right? So you have to take what it's giving you. So what I'm trying to determine right now is, are they trying to drop this thing to retrace it to keep it going higher and then, clear those higher time frame equal highs? Or is this just a retracement to a premium to keep selling off? You see how it's a conflicting analysis when you're in a range like that. And outside of small scalps, it can be really tough to frame a direction. It's easy to get beat up, especially if you don't know what you're doing. And it's my goal for you guys to not be in that position. All right, so we're inside that 940, 950, no, 945 5-minute gap. Interested to see how we trade in that. What would be really interesting is if this was a Judas swing and then they turn this thing bullish on the day. I would not be surprised. Like I said, I'm watching that 945 gap here. This is going to let this thing tell me where we're going. If they're going to roll it over into the lows, they'll do it from this gap. If they're going to decide to take it higher and take us into opening range gap, the current one, then it'll have to get through that gap anyway. So I'm just going to let that 5-minute gap tell me what we're doing. This is the first presented fair value gap here. I want to see how we trade there. So now I'm having to likely pivot because these lows here, based off how we're trading here, isn't really a factor. So now what's of interest is, do they want to come back for these highs here? It looks like that's definitely what they're doing on the ES. Let me show you guys here. Well, Dow's already made higher. I sort of tried to. S&P, yeah, S&P definitely wants these equal highs up here. So look at this. They left the equal highs on ES. They sunk it, and now they're going to bring it back up into those highs, it looks like. I'm going to take a long here on the ES. Just 5-handle tight stop and see if we can get the highs here. All right, want to see NASDAQ get through its first presented gap here. Tight risk on the trade. It's going to be in there with 1 mini. Not going to pyramid it up either. We want to see NASDAQ keep making ground through its first presented gap here. That'll allow ES to rally. All right, so I want to see us hurry up and get above that 938 high. And then as we accelerate through that, I'll roll the stop to break even and then see if I can get the rest of the juice here to punch above the highs. So I try to finesse this. Yeah, let's do it. See if I can finesse it a little bit here. All right, I'll take the 10 handles there. What I was going to try to do is finesse it into the opening range gap here. So opening range gap here from the close to the open was to see if I could get consequent encroachment. I was like, it's a consolidation. Fuck it. Let me just get paid here. Just get paid and move to the sidelines. So let's see if they get that see if they give that 79.25 print just for a little moral victory there. So there was the trade there. Once I saw the market dropped, we then pivoted, right? Because we talked about how This 5 minute gap, if it's going to go lower, it would have to do what? Go lower from here. Did it give you anything here on a lower time frame that would like support this thing turning? Not at all, right? So if it's not going lower, it's going to do what? It's going to go higher. Well, not there's actually three options, right? It can go higher, it can go lower, and it can go nowhere, right? So there's not just two options. It can also go nowhere. But if you're in a kill zone and there's volatility and it's likely to move and it's not going to go lower, then it's probably going to do what? Go higher and gun for what? The buy stops. So we talked about that here, how, okay, these lows here, yes, they're equal. Yeah, they're very juicy, right? I'm looking at them. I'm all over them like white on rice. But if order flow is bullish, I have to do what? Get in sync with that. And then we talked about first pres here. I know many of you guys don't trade ES, just a few of you guys do. So love my ES traders, by the way. But you saw the first presented gap here, how we were calling that. So when I was on both, oh, look, there's that 80 print. So there's that consequent encroachment of the opening range gap. Beautiful. So you guys remember we talked about this first presented fair value gap as it was in here, saying it needs to leave it. So you see how it used that here? This could be an entry for you. So for those of you guys that are trading NASDAQ, this is your long right here, inside first pres. Aiming for what? The highs here and here. What I would do if I was long NASDAQ, I would be taking something off as ES reaches the target. That's called correlated asset trade management, meaning if I'm long NASDAQ and ES is already reaching like a key daily high, a key weekly level, I want to be scaling something off in NASDAQ because what if NASDAQ doesn't reach the highs and that becomes an SMT and then it drops? I'm not saying that's the case, but many times you see that will happen. And if you're in a trade and you're always demanding the best case while the other asset already reached it, what you'll see is there's many opportunities where you could have paid yourself, but you didn't. And that's why looking at both assets is very important. So what if you weren't trading S&P and you're trading NASDAQ here, Dylan? I would be cashed out a fair amount of the position at like 50, 60 handles, which is pretty decent in NASDAQ, at least these days. And then using the insight of a market maker buy model here to clear out the original consolidation. So you see here what I went long on inside here. So I'm buying inside the down close candles. So this is a bullish order block here in my analysis. So this is a bullish order block that should support price. So I'm buying inside of it. You can wait for it to leave it, come back down into it. But because I'm really bullish, I want to buy inside that level. I want to get a good discount entry because what I should have bought, right, was this order block here, right? So as it was dipping down into this, I was watching that buy because that's also the first presented gap for S&P as well. So two factors here. As soon as I saw us dip down into first pres and the order block, and then look at the bodies here. My goodness, guys, what is that telling you? Bodies in the upper half. And you have a liquidity pool. That's an easy draw. Boom, get paid. And these are grocery getters that are forming every hour, right? So every session you have these types of setups when it's moving, right? Obviously, if it chops, well, then you have to just, manage that. But if the market's moving, these setups are available every session. And these are just easy little grocery getter type trades. Nothing crazy, nothing like going long down here. And the reason why I had to wait for all that here, well, then, if you're bullish, you want to go long as close as you can in a discount. Yes, absolutely. However, if I don't have that clarity and I have to wait for that information, then I have to wait for the market to become one-sided and very obvious for me. And it was very obvious once I saw all these breakaway gaps here. First pres closed above, upper half support, and there's equal highs. Like that's just like a dead ringer. It's going there. So yeah,